Video, we'll be going over the Modified Adjusted Gross Income, or MAGI worksheet for line 13 of IRS Form 8960. So for individual taxpayers who may be trying to calculate their net investment income tax, you'll eventually come to this line on your Form 8960, and it will say something to the effect of modified adjusted gross income C instructions. So if you did not exclude any amounts from your income under section 911 and you don't own what is known as a CFC or a PFIC, these are all items related to foreign income, then you can simply put your adjusted gross income in here. Specifically, Section 911 of the Internal Revenue Code refers to exclusions, income exclusions for U.S. residents and citizens located abroad. Basically, people that live overseas and may be able to exclude part or all of their foreign earned income by filing IRS Form 2555. So this MAGI worksheet forces the recalculation of those deductions and exclusions, and then additional adjustments based on whether or not you own, either directly or indirectly, stock in a CFC or PFIC. So first things first, what is a CFC or a PFIC? If you don't know what it is, you probably don't own one. It's not going to be one that you have in your, it's not going to be anything that you have in your 401k or in your IRA that you accidentally own. So if you don't know about this and you aren't claiming any exclusions of foreign earned income, if you don't file IRS Form 2555, you probably can just skip this and enter your AGI into line 13. So we're going to first start with the AGI for our hero. In line 1, we'll say it's $100,000. In line 2, basically we're going to use lines 2A and 2B to kind of force out some of those adjustments to income. We're going to put them back in. So the foreign earned income exclusion, which you would find on line 42 of your Form 2555, in this case it's $20,000. Line 44 is the deductions from that are allocable to your foreign earned income. So any tax deductions that would be taken from your AGI that are directly related to your foreign earned income, you can get that number from line 44. We'll combine those and we get $30,000 right here. So now if you do have certain PFICs or certain CFCs, you'll need to make some adjustments. So as regards to 1291 funds, you would increase your AGI by the amount of excess distributions derived from a PFIC that are dividends included in your modified adjusted gross income, but not included in gross income for regular tax purposes. So in other words, anything that was excluded from MAGI, you're going to put back in. And then same with any gains that are treated as an excess distribution under Section 1291 that would be included in MAGI, but not included in gross income for tax purposes. And then there are several other adjustments that you would need to make for CFCs and QEFs that do not have a Section 1.1411-10G election in effect. If you don't know what any of this means, it probably does not apply to you. So the first adjustment is to decrease your AGI by the amount of any Section 951A, 951 capital A, or Section 1293A inclusions. You would increase AGI by the amount of any distributions described in section 959D or 1293C that would be included in your net investment income as a dividend. You will increase or decrease your AGI as appropriate by the amount of any adjustment to gain or loss on the disposition of your CFC or QEF that results in an adjustment to your MAGI. You would increase or decrease your AGI as appropriate by the amount of any adjustment to gain or loss on the disposition of an interest in a domestic partnership or an S corporation that holds a CFC or a QEF that results in an adjustment to MAGI. You would increase or decrease as appropriate by the amount of any adjustment to your investment interest expense under regulation section 1.1411-10C5 that was accounted for in computing MAGI. And you would increase or decrease as appropriate by the amount reported to you on Schedule K1 in Box 14 marked with the code H. This would be on a Form 1041, so either an estate or a trust. That requires an MAGI adjustment. So again, IRS Form 1041, Schedule K1, Box 14 marked with the code H. Finally, for CFCs and QEFs that are held in a Section 1411 trade or business or with a Section 1.1411-10G election in effect, you would increase your AGI by the amount of any distributions described in either Section 959D or Section 1293C included in your net investment income as a dividend. So if you don't own, either directly or indirectly, any interest in CFCs or PFICs, and you don't exclude any foreign earned income on IRS Form 2555, you can simply enter your AGI from your Form 1040 or your Form 1040 SR on line 13. So we do cover IRS Form 8960 in much more detail. You can check out the article on the entire form. We'll put a link to that in our show notes, as well as the video on the entire form. This is just for the line 13 MAGI worksheet. So if you like our articles, please subscribe to our newsletter. And if you like our YouTube videos, please subscribe to our YouTube channel. And if you have any questions, comments, or if there's a topic that you'd like to hear about in an upcoming video, please hit me up in the comments section. Thank you very much and have a great day.